Right, Haributala, we already know about financial statements and uh, how to make the loss or profit statement and a statement of financial position, right? And last week, I told you about the double entries of adjustments, right? Double entries of these adjustments. Depreciation, accrued expenses and incomes, prepaid expenses, and bad debts. Then we have bank loans and fixed deposits, right? Right. These are the main adjustments, right? So today I'm going to teach you how to solve these adjustments and how to input these adjustments to loss or profit statement and statement of financial position, right? For today, I keep this, right? And I'm starting from accrued expenses, right? For accrued expenses, what are accrued expenses? Accrued expenses means the expenses we couldn't pay, we couldn't settle, no? So then what happens? As an example, let's think about 2023 to 2023 to 2024, right? Right. Right. Let's think about the electricity charges. Right. So for our question, they are giving us a trial balance, no? They are giving us a trial balance for exams, right? Like this. They're giving trial balance like this, and this side is debit and this side is credit. So all the balances of assets and expenses we can identify because all the assets and expenses are debit and all the liabilities, incomes, and equities are balance of equities are credit. So if they give us like this, sometimes they give us like this: debtors and creditors, and they put like this: 50,000 for debit side and 30,000 for credit side. Likewise, how if they gave like this, how to identify debtors and creditors? So you must understand debtors are, now you already know debtors are, we consider it as an asset. So balances of assets are already debit. So debtors are 50,000 and creditors are liability, no? So balance of liabilities credit. So creditors are 30,000, right? I think you have an idea about this, right? This is the first thing, right? And if we talk about electricity charge, right? They are giving like this. They are giving in the trial balance like this, right? As they are giving as electricity, and they will give like 16,000 to debit because electricity is an expense. So balance of expenses are debit. And after that, they give us some adjustments, no, additional details. So here in additional details, they will say like this: accrued electricity, 3,000, right? So what's the meaning of this, right? Here meaning is they have already paid 16,000 of electricity. It means if we think about this year, this is 20, the trial balance of trial balance. So 31st December 2023, right? So in the trial balance, they have noted 60,000 as electricity to debit side. It means we have already paid 60,000 of electricity. We have already paid 16,000, right? And in the below, we can see in additional details, they have mentioned as accrued electricity charges 3,000. Accrued electricity charges 3,000. It means we haven't paid yet. No, it means we have to pay this. So, and they are giving us these two statements, no? Loss or profit statement here, and here they will give us statement of financial position, right? These are the two statements we have to record, no? Here, loss or profit. Here, statement of financial position, right? So, if they give like this, the meaning is we have already paid 16,000 and we have to pay another 13,000. It means what is the real expense of the 2003? What is the real electricity charges of 2003? Already paid 16,000 plus remaining 3,000. So altogether, so complete electricity charges is 19,000. No, 19,000, right? So in the loss or profit statement, we have to input the real expense and real income, no? So basically, in the loss or profit statement, we record incomes and expenses, no? So when we record incomes and expenses, we have to enter the real expense of the relevant particular time period. So here time period is 2000, 1st January 1st to December 31st, right? So now we are going to find the real electricity charge of the relevant time period. So it is already paid 16,000 plus remaining 3,000, and electricity charges is an administration expense, no? Administration expense. So under the administration expense, we have to enter the electricity, no? Electricity. So electricity charges, we have to put the real, no? It means already paid plus accrued both 19,000, right? The real expense of the relevant time period. Sometimes we might pay or we might pay or not, right? It's not a problem, but we have to input the real expense, right? So real expense is 16,000, and after that we have to check it again. How much we have paid and how much remaining. So this remaining accrued means we couldn't pay this, no? So what happens for expenses when we when we can't pay, right? When we couldn't pay, right? What happens? It's automatically convert to a liability, no, from an expense to liability. So then what happens? This 3,000 is remain accrued. So you already know accrued expenses are a liability, right? So this 3,000 is a liability. So under the current liabilities, we record accrued electricity as 3,000. Understood? Right? So in the loss of profit statement, we have to enter the real expense of the relevant time period, whether we have paid or not, right? It doesn't matter. We have to enter the real one. And if we have an adjustment, it means overpaid or halfly paid, then we have to do the adjustment. So here we have paid halfly, no? We have remaining another 3,000 to pay. So it means we haven't paid 3,000. We have a liability of 3,000 because when we overdue expenses, what happens? When we overdue expenses, it automatically converts to a liability. So this accrued electricity charges converted to a liability. So we had to enter this as under the current liabilities as accrued electricity 3,000, right? So they are asking the question like this. In the trial balance, they are giving the balance of electricity charges. Mean of this is we have already paid 16,000 for electricity. And additional details, they are saying that we have to pay another 3,000. It means the total expense of the year is 16,000 plus 3,000, altogether 19,000. But we have to 19,000. We have to input the real expense in the loss of profit statement. But we have an adjustment. What is the adjustment? We have remaining 3,000 of accrued electricity. So it is a liability because or any expense when any expense are overdue, it automatically converts to a liability. So under the current liabilities, we enter accrued electricity charges as 3,000, right? I'll give you another example. Insurance charges, right? Insurance charges. They have paid 4,000. It means they have mentioned 4,000 in the trial balance. And in additional details, they have said that accrued insurance 1,000. So what's the mean of that? The mean of this is we have already paid 4,000 for insurance. For insurance, we have already paid 4,000. And we have another 1,000 to pay. 1,000 to pay. 1,000 rupees to pay. 1,000 remaining. We call it accrued insurance. No. So in the loss of profit statement, insurance is an expense. In the loss of profit statement, we have to input insurance under administration expenses, right? But what is the value? Value is the real expense of the time period. What is the real expense? Paid one and remaining one. Paid 4,000 plus remaining 1,000. Altogether, it's 5,000. So total expense is 5,000. But we have paid only 4,000. Then we have 1,000 of accrued. Accrued means it's a liability. So we input this also under current liabilities as accrued insurance, right? Insurance as this 1,000, right? This is how we input accrued expenses to the financial statements, to the loss of profit and statement of financial positions. Right? Understood?
Yes, sir.
Right, good. Then next one, right? Next one we are talking about accrued incomes. Accrued incomes. So let's say like this. We have rented our partition for another person, right? So he has agreed to pay us 120,000 per year. But for this year, building rent. Building rent, it is mentioned as 100,000, right? When we input building rent to credit side, it is an income. It means building rent received. When we input building rent to debit side, it is an expense. It means building rent we paid, right? I think you have an idea about this, right? The difference between building rent, received building rent and paid building rent. For incomes, received building rent is an income, so it shows to it not to credit side, and building rent paid means it is an expense, so it notes to debit side. So here we have noted to credit side. It means building rent here is an income, right? And in the additional details, they have mentioned as accrued building rent income. Come and mention, and they have mentioned 20,000 as accrued building rent income. So it means they have paid for this. Before one, it was an expense we had to pay, and we have to pay another remaining. But here they paid us. They paid us 100,000, and accrued rent 20,000, right? So what's the meaning of this? Building rent we received 100,000 and another 20,000 to be received, right? To be received. But still they haven't paid, right? They haven't given, right? So this is an income, no? So incomes we have to input under other incomes in the loss or profit statement as rent income, building rent or building rent building rent income or building rent received, no problem, right? Income as, so we have to calculate the real value, no? Real income. What's the real income of the particular time period of this year? The paid one and remaining 20,000, no? So all together we can take the total building rent income of the year, no? Total one is 120,000. But they have paid only 100,000. 20,000 to be received. No, to be received. So this one, before you remember, you know, accrued expenses, what happens? When we overdue expenses, it automatically converted to a liability. But this one is income, no? The opposite side of the expenses. It means accrued income. What happens? When some incomes overdue, what happens? It also convert to a asset. No, it also convert to an asset. It also converts to an asset. So this accrued rent means it is an asset. So we have to input this under current assets as accrued rent income as 20,000. Right. I'll give you another example. Right. Commission. Commission 30,000. It means they have paid, we received 30,000 of commission. And in additional details, they have mentioned as like this: accrued commission 5,000. So here, if we input this to debit side, it is an expense. But here we have an order to credit side. It means it is an income. So now we have to get the total commission income of the relevant time period at first to input to the loss or profit statement. So commission received 30,000. And now, for additional details, they have mentioned accrued commission as accrued commission as 5,000. What's that mean? We already received 30,000, but another 5,000 remaining to be received. No? So, what is the total income of this? Received one and accrued one. No? So, when we get all together, it shows 35,000. No? 35,000. Commission is an other income. So, we have to input under other incomes, commission received or income, no problem. Received as the real expense, received and to be received. Altogether 35,000. But we have received only 30,000. This 5,000 is remaining. It means what happens overdue and income? It also convert to an asset. Under the current asset, we have to input as accrued commission income as 5,000. Understood? How to input accrued expenses and incomes? Right? Okay. Then next, we are going to learn about prepaid expenses. Prepaid expenses. Right? It's like this. Right? Prepaid expenses. Let's think about telephone charges, right? Telephone charges. It is an expense, no? So in the trial balance, they have given like this. Telephone charges $7,000, right? And you can see under the additional details, they have mentioned like this. Prepaid telephone charges as 2,000. What's the meaning of this? The meaning of here is we paid 7,000 of telephone charges, right? And here they are saying the one we pay additional, no? We have paid additional or another 2,000. So it means this 2,000 include in this, no? Include in this, right? Include in this. For some expenses, putala, some businesses, some businessmen pay an extra amounts, pay an additional amounts. Like if we think about an example, for my house, I have paid already additional 15,000 for the electricity charges, right? It's easy for me to prepay. Why? Because then for coming 2-3 months, I don't have to pay because I have already paid. So we can pay charges for our future expenses, no? So this is that is what we call prepaid expenses. For all the expenses we can pay for the future. So here meaning is telephone charges they have paid 7,000, and here they are saying prepaid means they have paid 2,000 for the future. So it means in this 7,000, this future 2,000 is included, no? This 2,000 is included. So for loss or profit statement, we have to take the real expense to input, no? So telephone charges is an administration expense, no? Administration expense. So under administration expense, we can mention as telephone charges. And here we have paid 7,000, but for future we have paid another 2,000, right? So it means we have paid 2,000 prepaid, no? Prepaid 2,000. We have paid additionally 2,000. So to get the real expense, we have to minus this 2,000 from this 7,000. This 7,000. So the real expense of this time period is 5,000, no? So for telephone charges here only 5,000. But we have paid 7,000, no? It means what happens? What happens when we pay for the future? This one, just think, we have paid additional 2,000 for the future. It means it is an investment, no? So investment are assets, no? Are assets. So we have to input this 2,000 under the current assets as prepaid telephone charges as 2,000, right? We have to input under the current assets as prepaid telephone charges as 2,000. I will give you another example like this, right? Let's think that we have taken a building for rent, right? We have taken a building for rent, right? So last time we have given our building for rent. Now we have taken. It means building rent we have to pay, no? Building rent. It's mentioned as 80,000. So this time this is an expense. So we have to input it under debit, right? And they have mentioned 80,000 of building rent. It means we have already paid 80,000 for building rent. But under the additional details, they have mentioned as prepaid building rent 15,000. It means we have paid 15,000. We have paid 15,000 prepaid. This one is prepaid. Mean of this is we have already paid additional 15,000. So that additional 15,000 is included in this 80,000. So now we need to get the real expense of the relevant time period to input to loss or profit statement under administration expenses, because built-in rent is an administration expense. So here we have paid 80,000, but 15 of 8, this 80,000 is prepaid. It means we have to deduct this 15,000 to take the real expense. No, then the real expense is 65,000. So we input built-in rent, $65,000 under the administration expenses. But it's not over. We have an adjustment. What is the adjustment? We have prepaid one. Prepaid means it is an asset because we have paid for the future. Paid for the future means it is an investment. Investments are assets, current assets, right? For this 15,000 is current asset. So we have to input as prepaid building rent. Rent this 15,000, right? Understood? Right?
Yes, sir.
Okay. This is how we input prepaid expenses to the financial statements, both loss of profit and statement of financial position, right? Now we have entered accrued expenses, accrued incomes, and prepaid expenses, right? Now we are going to talk about bad debts, right? Bad debts. What's the meaning of bad debts? What is bad debts? Bad debts means, so we sell products on credit, no? So then debtors increase, right? Let's think like this, right? We have like this. We have debtors in a certain debtors 75,000, right? So this is the total of debtors, no? So when we take it one by one, it's like this. Kasun 30,000, right? Nimal 20,000. Then Akila 25,000, right? So totally we have input this debtors to the trial balance like this, right? So an additional details they have mentioned. Write off 5,000 as bad debts from debtors, right? Write off 5,000 as bad debts from debtors. So it means we have already remaining 75,000 of debtors. Debtors 75,000, right? And they are saying cut off 5,000 from debtors. So what happens when we cut off? Then 5,000 we have to deduct. So then the balance of debtors are 70,000. Balance of debtors are 70,000. No? But this one, okay. We deduct this 5,000, but it is a bad debt, no? So it is an expense. So this 5,000 is a bad debt, no? So when we deduct bad debts from debtors, we can have the remaining debtors. So it's the mean. So here they have mentioned debtors as 75,000. Debtor is an asset. We mentioned as 75,000. And under there, they have mentioned 5,000, write off 5,000 as bad debts. So bad debts is an expense. Which expenses? Bad debts are distribution expenses now. So this is the expense of bad debts of the time period. Distribution expenses, right? As bad debts 5,000, right? And this 5,000 we have to deduct from debtors. Then balance of debtors are 65,000, right? This is how we input debtors and bad debts to the financial statements. And for sometimes they are giving like this, and for sometimes they are giving like this. They are giving both parties in the trial balance, right? They are giving both parties in the trial balance like this. Debtors 75,000 and they mention bad debts as 3,000. What's that mean? What's that mean? The mean of this is after the deduction of bad debts, the remaining balance of debtors are 75,000, right? After the deduction of bad debts, right? So before the bad debts, the debtors were 78,000, like this. Here 75,000, we deduct to 5,000, like this, right? So if we input this like this, let's input this like here, right? Forget this and input like this. So they haven't given this 5,000 as additional details, but they have input this 5,000 to trial balance like this. Debtors 65,000 and bad debts 5,000. Then what's the mean? The mean is after the deduction of bad debts, after the deduction of bad debts, the remaining debtors are 65,000. Before the deduction of the bad debts, the remaining was 75,000. Understood? After the deduction of bad debts, now the balance is 65,000. Before it was here 7,000. Before it was here 70,000. No, 5,000 will deduct. Before it was 70,000, right? So it means now we have already adjusted this. So in this time we just have to input bad debts here because the value of bad debts are 5,000 and the remaining debtors are 65,000, like this, right? Remaining debtors are 65,000, like this, right? After the deduction. But before we calculated, right, without bad debts. Last time there were no bad debts in the trial balance. It was after the trial balance, right? That's why we adjusted it and did the calculation and input like this. But after this, it takes up. It came up, right? It came up. So after the deduction of bad debts, it came up. This is the situation. And for sometimes they are giving bad debtors and bad debts. And for additional details, they are saying another one, write off 2,000 from debtors as bad debts. What's the meaning of that? What's the meaning of that? It means we have already reserved as bad debts 5,000, but it's not enough. We have to reserve another 2,000 for bad debts. Right? Understood? We have already reserved 5,000 as bad debts, but it's not enough. So we have to reserve another 2,000 as bad debts. So what is the actual bad debt expenses for the relevant time period? Already reserved 5,000. Already reserved 5,000 and another 2,000 to be reserved. No? So altogether, it's 7,000. No? It's 7,000. So then we have to input bad debts under the distribution expenses as 7,000. And here they have only mentioned 65,000 for the as debtors. No? So we take this 65,000 here and we deduct. Now we have already deduct this 5,000. That's why it is 65,000, right? Because if because these bad debts are in the trial balance, so it means we have already deducted this 5,000 from this debtors. But this one is not in the trial balance. It is after the trial balance. It means we have to deduct another this 2,000 from the debtors. Then the balance is 63,000. Understood? It is an important.
Yes, sir.
So, if they have mentioned bad debts in the trial balance, it means it's already deducted from the debtors. If not, if they have mentioned bad debts after the trial balance, then we have to deduct this 2,000 from the debtors, and we have to add this to the current bad debts, right? If this one is not here, then we just have to only deduct from debtors and take this 5,000 as, take this amount as distribution expenses. Understood?
Yes, sir.
Right. So bad debts also now over. Right. So when you cal this, when you make this, be careful, right? Be careful of these movements. That's why I'm teaching you the incidents and the movements of this part, right? So then you can keep focusing on this, right? And bank loans, right? Bank loans. Bank loan is a liability, no? So sometimes they have mentioned bank loans like this in the trial balance, like this. Bank loan, it's a liability. It's for definitely for credit side. Let's say 50,000, right? 50,000. So when they input like this, we just have to enter this bank loan under non-current liabilities, like this, as bank loan 50,000, right? 50,000. It's just, right? Just we have to add this, right? Nothing to do more. But when they have mentioned like this, if they mention like this, 10% of bank loan, 10% of bank loan, it means we have to pay 10% of, what is this? This mean of this is what? Interest. Interest, no? So 10% bank loan means we have to pay 10% for this amount annually, no? We have to pay 10,000 or 50,000 annually as bank loan interest. So it means 10% of 50,000 means 5,000 we have to pay as bank loan. So it is an expense, bank loan interest. We have to put under financial expenses as bank loan interest 5,000. Right, 5,000. It is the real expense of the year. And we have to check whether we have paid this 5,000 in the trial balance. If we have paid as bank loan interest as 5,000, it's okay. Then we have added it to the loss of profit as expense, and we have paid this, so no adjustments. But if they have not mentioned, what happens? Then we have to pay, no? We have obtained a bank loan of 10% for 10% interest, and the 10% is 5,000. It is an expense, so this is the expense relevant of the bank account within the time period. So we enter this real expenses under financial expenses as bank loan interest, right? It's okay. Expense is okay. Then we have to check whether we have paid this 5,000. If we have paid as 5,000, then it's okay. We have completed the deal. We have completed the deal. If they are not mentioned, it means we have to pay. So it means this is an bank loan interest is an expense, but we haven't paid. It means it's remaining. So it converts to a accrued bank loan interest, no? So it is a accrued bank loan interest means it is an expense, but we haven't paid. It already converted to a liability. So then under current liabilities, we have to pay, we have to enter as accrued bank loan interest as this 5,000. If they are not mentioned, right? And for sometimes they have mentioned 5,000. So then we don't need to add this 5,000. And for sometimes they have mentioned like this, bank loan interest 3,000. What's that mean? The total expense is 5,000, but they have paid only 3,000. They have paid only 3,000. So out of this 3,000, we have remaining 2,000 of accrued bank loan interest, no? So now we have already included the real expense. When with taking the 10% of this 50,000 as 5,000, we have entered this. It's okay. And whether we check whether they have paid, yes, they have paid, but they have paid only 3,000. We have to pay another 2,000. So this is accrued bank loan interest as before, because we have paid only 3,000. We have to pay another 2,000 as accrued bank loan interest. Then what happens? What we do is we have to add this as accrued bank loan interest as 2,000. Before we entered 5,000 because they haven't paid anything for bank loan interest. They haven't paid anything for bank loan interest. It means they have paid zero. No, they have paid zero. So we have to pay the complete 5,000 because it's the total 5,000 is remaining. But here they have paid 3,000. It means we have to pay only 2,000. And we have only 2,000 remaining to be paid. So we have to pay this. So it's an accrued bank loan interest. We entered like this, right? And if they mention like this, if they mention that they have paid 8,000, then what happens? 8,000, then what happens? The expense is 5,000, but they have paid 8,000. It means they have paid additional 3,000. It means They have paid additional 3,000 for the future. So paying expenses for the future, it always converts to an asset, no? So this one, prepaid, no? Prepaid bank loan interest. So it is a current asset. So like this situation, we input this under current assets as prepaid bank loan interest as 3,000. But this expense is expense, right? This 5,000 is 5,000 because this is the real expense, right? Adjustment is the only one which can change, right? Understood these adjustments?
Yes, sir.
Right. Then fixed deposits. It is the opposite side of bank loan, right? It's easy. So when Putala, for bank loans, you must be careful of bank loan interest payments, right? And about this, if they haven't mentioned a percentage, you don't need to pay bank loan interest. But if they have mentioned the interest, you have to pay the bank loan interest. Then you have to check whether we have paid bank loan interest. If not, we have to first put the real expense, and we have to pay the consider the complete interest as accrued. But if we have paid half, then we have to input the remaining one as current liability as accrued. And if they have paid additionally, then we have to put this as current asset because we have paid for the future. Future is an investment, as future is an investment, right? So fixed deposits also same, right? And for fixed deposit, it is the opposite side of bank loan, right? Fixed deposit is an asset for a business. So it's like this, right? Let's say as fixed deposits. Let's say as fixed deposit, they have mentioned fixed deposit. They have mentioned 100,000, right? Debit, no, it is an asset. So as balance of assets are debit. If they have just entered like this without percentage, then we have to input this fixed deposit as non-current asset under the non-current assets as fixed deposit 100,000. It's okay, right? But if they have mentioned like this with a percentage like before, so it means this is the fixed deposit interest. Bank loan interest is an expense as well as fixed deposit interest is an income. So we have to input the interest of fixed deposit under the other incomes of loss or profit. Right. So 10% of 100,000 is 10,000. So this is the relevant income of the fixed deposit of this time period. So we can write this income as fixed deposit interest as 10,000 because this is the real value of real income of fixed deposit, right? Then we have to check like before. We have to check whether we received fixed deposit interest. If not, if they haven't mentioned fixed deposit interest, it means it must to be received. It must to be received, but haven't. It means accrued income, no, accrued income. Accrued 10,000 of fixed deposit, 10,000 of fixed deposit interest. So accrued incomes we input to under current assets of statement of financial position as accrued fixed deposit interest. Accrued fixed deposit interest as 10,000. If they have, if we have received a fixed deposit interest as 8,000, so it is an income. So when we input this to credit side, if we received 8,000, it means out of this 10,000, we already received 8,000 and 2,000 to be received. So it is also an accrued fixed deposit interest. But this one, they have given us 8,000, so only 2,000 remaining. Then we input 2,000 here. But this income is income, right? It's not different, it's same, right? For this time, right? And for sometimes if they have paid like 12,000, right? But right? If they have paid 12,000, it means they have paid us additionally. It means we owe them 2,000, no? They have paid us additional 2,000. It means we owe them 2,000. It means it is a liability. Then we have to put this under current liability. Prepaid, pre-received here. Then we have to say pre-received bank loan interest as this 2,000. Pre-received here, prepaid, now pre-received, right? As like this. Understood these adjustments, Utala?
Yes, sir.
Right. Okay. So that's it. These are the adjustments you have to do for your exams, right? These are the only things. And depreciation you already know. I explained you 2-3 weeks ago, no? You know, I explained this separate one by one, right? So I think you have an idea about how to enter these adjustments to the loss of profit statement and statement of financial position, no?